Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, there's actually quite a lot to discuss as I've been out of town for over a week now. In fact, all the videos released on my channel over the last week were recorded basically a week before that. Now, fortunately, many of the topics were still very relevant, and we'll talk about those. But there's obviously a lot to talk about. A lot happened last week, especially in the stock market. And we'll talk about Bitcoin's response. So, generally, if I just want to talk about a lot of different things that relate to Bitcoin, I'll just make it a dubious speculation video, which is what this is. In the short term, note that Bitcoin has been having a hard time actually getting back above its 21-week EMA. So as I said previously, you know, the support band, right, the bull market support band is resistance until proven otherwise. And so far, you know, nothing has been proven to sort of refute that idea. Now, you might wonder, why is Bitcoin not doing so well during this time of the year? Normally, Bitcoin does pretty well in, you know, sort of the April timeframe of post-halving years. But as we talked about, we expected weakness in the stock market starting around February OPEX, February options expiration. If you guys remember, we talked a lot about that a couple of months ago, that there would basically be weakness in the stock market starting around February OPEX and at least extending through March OPEX. But then we noted that due to some of the things we've seen in the past, that weakness can extend into early to mid-April, given the whole tariff stuff and inflationary worries that might persist into April with the tariffs and whatnot. It seems somewhat likely that the stock market would continue to show weakness into early to mid-April. This is what we talked about. And one of the things that, if you look closely at some of the prior downtrends that started kind of around that same time frame, sort of like late February going into March. Again, a lot of times you'll find lows in March, but there are some times where it will persist into sort of mid-April or so. 1997 is a good example of that, right? Weakness started in sort of late February, just like it did this year, and then it persisted until about mid-April or so. In fact, if you look at a price range, though, back then, it was only about a 10% drop, which right now, obviously, the S&P is pushing a lot worse than that. And then also, if you look at the S&P 500 in sort of the dot-com era, when it started to drop in that sort of that March timeframe, it also extended into sort of mid-April or so. But what I'm looking at right now has nothing to really do necessarily with those sorts of comparisons, because this drop for the S&P has actually been quite a lot more than what you've seen in those other years, right? It's been about 17 to 18% or so. Now remember, I mean, we do have, obviously we had the inverted yield curve. It's actually re-inverted, I believe. But I was looking at this drop, and there's a pattern I've sort of looked at, and you actually see it play out several times with the stock market. And the reason I'm talking about this, remember, is in this video on Bitcoin. It is, but in order to really understand like what Bitcoin's going to do, we need to understand what the stock market's going to do, because whether we like it or not, Bitcoin is in fact a risk asset, right? I've sort of seen a lot of people say that Bitcoin hasn't gone down despite the fact that the stock market has, but I don't know that that's even necessarily true. I mean, I think it depends on how you measure it, of course. I mean, the stock market right now is down about 17 to 18% from the highs. Bitcoin, believe it or not, is actually down more than that. Even with the current bounce back up, it's down about 24% from the highs. So obviously there's the narrative out there that Bitcoin is doing really well, and that it's not dropping. But the reality is it's actually already dropped more than the stock market has. I think, though, that sort of a fair thing to suggest, though, is that, and this is sort of to cover our bases, that, well, yeah, I mean, you expect that, you know, sort of excess volatility with Bitcoin, because Bitcoin also went up a lot more than the stock market, right? So if Bitcoin went up 600%, which is what it did, and then it only drops 24%, that's a hell of a lot better than the stock market, going up only 76% and then dropping nearly the same amount that Bitcoin has. So you can understand like why there's been a lot more optimism recently this last week with crypto, because Bitcoin didn't really see that same type of sell-off. Now, we've talked a lot about, sort of these upcoming things for Bitcoin, but one of the things I would like to at least mention is, and there's no guarantees, right? There's absolutely no guarantees, but a lot of times in history where we see sort of the stock market sell off and where we see Bitcoin stay relatively flat, then people sort of celebrate it. And then what often happens, I don't know it off the top of my head, but what it seems like with my memory, what often happens is in like a week or two later, then Bitcoin drops. And then people are like, oh, okay, there it is. So I wouldn't necessarily jump to any conclusions just yet. Absolutely, Bitcoin has outperformed the stock market over the last week or so. In fact, if Bitcoin were at sort of the same level as the stock market, I mean, look at this. The stock market has retraced all of the gains that it's had since August of 2024. It's gone below that. If Bitcoin did the same thing, I mean, that would put Bitcoin back below $49,000 if it were basically behaving as the stock market. So the ultimate question is, well, is Bitcoin lagging? What's going on? I would still keep in mind sort of these two levels for Bitcoin. One of which I still think will likely be achieved, and that's a retest of the 2024 high. We actually saw Bitcoin retest the 2016 high in 2017, right? It was a fairly normal retest, right? I mean, we saw Bitcoin drop about 35%, and it retested the high from the prior year, right? It was about a 35% drop. And here, I mean, if you just take it from the high, about a 30, I mean, it gets you about the same level, right? Around that 2024 high. So with Bitcoin continuing to struggle here at the bull market support band, it at least puts that area on your radar, especially with the stock market sell-off that we've seen. Now, I wanted to mention that there's a pattern that I was looking at earlier, and I at least want to mention it so that it's on everyone's radar. You notice that the stock market sort of selling off into April, right? There was also weakness exactly 1 year ago in mid-April, okay? So, what I want to draw your attention to is this thing that the stock market sometimes does, where it will sweep a low about 1 year later, right? And I mean, it's kind of a sort of hand-wavy, but take a look at this. This actually happened several times throughout Bitcoin's history, where you'll find like weakness, and then there'll be a weakness again about a year later at that same time, where it'll sweep below that low. So if you look at like 1986, 1987, there was this low here in September, October, and then exactly 1 year later, it swept it, right? October is when it swept that low. So about a year. So you basically had a massive move up, right? A massive move up. And then the stock market just completely gave all those gains back. And it actually wasn't a recession in 1987. Now, obviously, things are, feel a little bit different than 1987 in terms of some things, like unemployment rate has been trending higher. But on the other hand, it's still relatively low, all things considered. And so that's one example where you sort of sweep a low 1 year later, and the stock market is actually getting pretty close to doing exactly that. Do you guys remember how we actually talked a lot about, the S&P divided by M2 and sort of this drop here? This weakness in the stock market that occurred right here was in October of 98, which was exactly, what was it, like 1 year basically after this drop right here, right about 1 year later, where it didn't quite sweep the low, right? But it had a drop, right? And it was about 1 year later, right? You had it from sort of late October to early October. So about a year. It's one of those things where, like, if you go back throughout history, you'll find it where the market, oftentimes when it drops like 1 year later, it'll sort of sweep a low before then getting a pretty large bounce up. Now, I want to talk, though, first about the S&P divided by M2, because a lot of people have asked about this. I've been out of town. We talked about this months ago, and it's basically sort of the recognition that this whole bull market began in October of 2022, the same level that the S&P divided by M2 began at in 1996, right? And you can see that it rallied up to this level, which is the same level it just got rejected at. Now, back then, what ultimately happened is that the stock market sold off for about 2 months or so, which is one of the reasons why I said to expect weakness in the stock market, that, sort of from that sort of mid-February to mid-April timeframe. It was sort of thinking, hey, like, what if this just plays out where the S&P divided by M2 gets this, approximate 20% drop, right? Approximate 20% drop. And when you look at it like this, you can see it already went below the mid-April low, right? And back then, that's basically what it did, right? If I remove everything, you can see that there was this low in October of 97, and then it basically went to that same level in October of 98. Now you have, this April of 2024, and then we just went back down to that low in April of 2025. Now, I don't know how much lower it's going to go before there's a larger bounce. Maybe the market's going to be looking for signs that tariffs won't be as bad, or maybe that inflation rate won't come in as high. But you at least have to keep these things in mind. And then I got sort of thinking, like, well, what happened in 1987? Because I mean, that was obviously a pretty big drop back then. And then you can see that when the market dropped, when you divide it by M2, it actually went well below where it was in October of 86. Remember, when we looked at it without M2, it didn't sweep it, but with M2, it went well below it, right? So it stayed there for a little while, and then ultimately the market recovered, and then finally we got a recession. But the recession low ended up not happening for, a while after that. So remember, like, when you do get recessions, I think this is the thing I've talked about a lot, is that you don't always get like 50% drops, right? I mean, sometimes you just get, 20% drops. And, now that the S&P has had, now that it's had an 18% drop, at least starts to have, starts to come to the mind, right? All right, well, it's not that far off what we've seen historical recessions, sort of the minimum baseline be approximately 20%. Now, they can obviously get a lot worse, but that's where they normally, sort of the starting point is approximately a 20% drop. And if you note, right, what happened back then is there was another rally, and then eventually it swept the low again, and got another rally, and then you finally got the recession. So it's an important reminder that the market can play out over very long periods of time, right? Very long periods of time, before it really starts to make sense. And in terms of like what's going on in the macro here too. I mean, it's low right here. This was October 97, and then you had October of 98. This was April of 2024, and then perhaps there'll be another low in April of 2025 before there's some type of relief rally. And I suggested we might start to finally see some relief around maybe the mid-April timeframe is what I'm thinking right now, because there's obviously still going to be some discussions about tariffs, and also, I mean, the inflation data comes out in mid-April. But I guess the question is like, well, given where the S&P is, if it does, if it is able to see a counter trend rally at the very least, then what happens to Bitcoin? Because so far, Bitcoin has been doing relatively okay, right? I mean, it has been. And I almost feel like you'd have to assume, right, that if Bitcoin, or if the stock market were to rally, well, then would Bitcoin not rally with it? I mean, it seems to be holding up better. So I don't know. I mean, like, I think that if history is any indication, right, we've seen times before where the stock market bottoms and then Bitcoin bottoms like a few weeks later, right? Actually, one great example of that is actually the last bear market, right? The S&P bottomed in October of 2022, I believe, right? If you look at the S&P in 2022, right, it bottomed in October of 2022, and then Bitcoin bottomed about 1 month later, right? About 1 month later, in November of 2022. Now, obviously, it was FTX, But again, sort of there's this argument that there's always a reason that we can explain away later as to why it took longer for Bitcoin to do that. Um, but there's no denying the relative strength by Bitcoin against the stock market. If you just plot out Bitcoin divided by the S&P, right? If you look at Bitcoin divided by the S&P, what you'll notice is that it actually is above the bull market support band right now. So it's been doing pretty well against the S&P. I guess the concern is that, like, is this different from like what we've seen before? Even in 2019, which we've made plenty of comparisons to, you sort of had these highs, right? You had these highs, and then it went below the bull market support band for a few weeks, and then there was a rally back above it, right? There was a rally back above it, but then you can see that there was another sell-off that occurred just on the other side of that. So I think, while there's always reason to look at Bitcoin during times like this and sort of celebrate the relative strength, and it'd be like, look, like it is holding up better than the stock market did last week. And, maybe it's because tariffs aren't going to, I saw someone say Ethereum's made of aluminum one time, and it kind of sticks in my mind, but I thought it was funny. But I guess this is sort of the point, is that, like, is it actually going to be durably outperforming, or is this just a lower high, kind of like 2019? Now, the one thing that I've talked a little bit about before is the death cross that's coming up for Bitcoin. And by coming up, I mean it should happen in the next day or two. I haven't actually looked at it that closely because I've been out of town. But if we look here, maybe it already happened. I don't know. Let's go take a look. No, yeah, but when I made the video about the death cross a week ago, I remember saying it should happen around April 6th, April 7th, something like that. It's now April 6th. It still hasn't happened, but it probably will happen in the next day or two. Okay? Now, what we sometimes see with that is, that there can be sell-offs before the death cross, and then sometime after the death cross occurs, there's then a counter trend rally. Now, a lot of people think that, just because it's happened before, it will always repeat. But let me just show you where this comes from, and I'll show you some counter examples as well. Like, if you look last year, there was a low that occurred just before the death cross, and then Bitcoin rallied up into it, right? And then that low ended up being the low for the, for that drop. And if you look at the year before, there was a low just before the death cross, and then it sort of rallied up right after the death cross, right? You really didn't get a rally into the death cross. It was more so Bitcoin dropped before the death cross, kind of bottomed out around the time of the death cross, and then it rallied on the other side of that death cross. There's other times where the market certainly played out in a somewhat different fashion. For instance, if you look at 2021, in fact, and why not? Because, that was a post-halving year. This is a post-halving year. Let's just go back and look at what happened in the death cross in 2021. You'll see that, when the death cross occurred, while there was ultimately a rally that came eventually, the market, Bitcoin still didn't really go anywhere for a little while, right? Like the market, the death cross occurred, and then Bitcoin just sold off. And then it didn't really start doing well again until about a month after that. And then if you go back and look at 2017, right, there was a death cross. And when that happened, if you go back all the way to 2017, there was a death cross right here. And, when it occurred, Bitcoin actually went a little bit lower first before getting a larger counter trend rally back up to that 200-day moving average. So, I don't want people to think that it has to play out like it played out the last couple of years. It obviously could do something different. But the thing I go back to, right, and the thing I continue to go back to, is that if the S&P 500 continues to show weakness, then Bitcoin will not be able to ignore it forever, right? Now, obviously, if the S&P bounces and there's no idiosyncratic risk that sort of comes out of nowhere in crypto, then you would expect Bitcoin to go up with the stock market. But if the stock market continues to just sell off, and let's say it does this thing where it sweeps the low from the prior year in April, right? Like if it sweeps that low, kind of like we saw before, there's times where it'll sweep a low or get around that level a year later. Like if Bitcoin or if the S&P 500 were to go back down to 4,900 or around the prior all-time high, not too far away from it, then I have to imagine that Bitcoin will eventually take notice, right? And then it could then fall a little bit further down. There's actually a good comparison here to make, with some of these drops, how you'll see Bitcoin, get these bounces back up, right? But then eventually you would almost expect it, at the very least, to check back in with that weekly close right there at just below 80K, like 78 to 79K. That's what it did last year after the death cross, right? So, I mean, I still think that's a likely outcome at some point in the coming weeks. I certainly could be wrong about that, but it seems like that's the likely outcome. I would honestly consider that to be the optimistic view. I'm still thinking that there's a good chance that Bitcoin will retest the 2024 high, and if it tests that trend line, sort of the lower high trend line, it would probably be a good sort of short-term trade. Like, if it were to test that trend line all the way down here, probably would be a really good short-term trade by Bitcoin. Like, you probably get a massive counter trend rally off of that level. But I wouldn't necessarily be that optimistic for the remainder of the cycle if it were to, in fact, play out like that. If it were to play out like 1998, right, when we saw the S&P drop 20% before getting a larger rally to new all-time highs, that could also correspond to Ethereum, right, going and sort of going home, as we talked about. And I mean, it does seem like a lot of the stuff for Ethereum that we've been discussing has been playing out. Which has been playing out in a really long period of time, to the point where like no one believes it's actually happening as it's actually happening. But anyways, I mean, those are my general views right now on Bitcoin. That, like, I know there's a lot of optimism about it outperforming the S&P, and it's true, right? It is, but I also know from experience, right? I've also been very sort of blind to that as well in the past, and then like come to find out it was just lagging, and then eventually it dropped. Like, if you look at sort of the Bitcoin divided by the S&P, and you just take it and you look at, say, like a fib retracement level, and you just take it from the highs, right? It's basically right now, it just retraced to the 618, right? It just retraced to the 618. Now, if you go back to 2019, which we've made some comparisons to as well, and you look at the fib retracement, like on this low, and this was right when the death cross occurred, that one went up to sort of the 0.5, right? That one went up to 0.5. But there's other times, right? There's other times where it did get a stronger rally. And I believe, if I don't really remember fully, but I thought it was up to the 0.618. It even went a little bit higher, right? But right here, you can see that the Bitcoin divided by the S&P got this massive rally right here to basically the 618, a little bit higher than it. And then eventually Bitcoin, the weakness in Bitcoin showed itself again until the money printers really turned back on. To just speak bluntly, right, what I think is going on is, here's the thing, right? I don't know how to say this, like, in sort of like a, methodical way, but there's a lot of things in crypto that we've talked about for a long time that are playing out, right? Like Ethereum's breaking down, it's finally going home. And that's ultimately what I said needed to happen for things like ETH Bitcoin to turn around. Now, it obviously hasn't turned around yet, right? It just continues to go lower. But remember what we said was that in order for it to turn around, you need a pivot by the Fed. But you can't get a pivot by the Fed until there's pain in the market. There's starting to be real pain in the market. And so what I think is happening, and I'm fine if you disagree with me on this, because I don't really know how much I believe it, but if someone said, Ben, try to explain what's happening, right? Like what's actually going on, at sort of the political level, and like why, all the tariff discussion, what's really going on. What I would say is that there's a good chance that, President Trump, he's a real estate guy, right? He's a real estate guy. He knows, right? He knows that the only way for the long end of the yield curve to come down is for there to be pain, right? Like you can't get the long end of the yield curve down without pain in the market, right? Because it's the very act of lower stock prices that then eventually lead to layoffs. Now, that doesn't mean you're going to see it in the data tomorrow. It could take half a year for that data to become apparent. But in order, right, in order for the long end to go down and to then start to potentially revive the real estate market eventually, because there's not really been a lot of transactions going on because rates are high and prices are high. So in order to really revive the real estate market, you need one of those things to come back down to earth, either the prices or the rates, right? Mortgage rates. I think he probably recognizes that he doesn't really want, to sort of watch this play out over a long period of time where, it just kind of drags out on and on and on. It's almost like, why not just get it out of the way now and deal with whatever pain comes with that so that it's not the talking point for forever, right? It's unclear right now if he's going to get more than he bargained for. Because again, while the stock market going down means the long end of the yield curve goes down, it can lead to layoffs. And so there's a good chance that maybe some of the rhetoric will eventually be softened up. At that point, I would expect a large rally in risk assets. But there's always that question of, was too much damage done? Where you ultimately still get a larger drop later on because businesses start laying people off. Remember, a lot of people think that layoffs occur and then the stock market goes down. But it's not true, right? It's normally the stock market goes down and then layoffs occur, which then leads to a negative feedback loop, right? And so then the layoffs then mean the stock market keeps going down. And it's hard to get out of that negative feedback loop. But it's the thing that sort of sets it off to begin with is the stock market going down, right? Stocks go down, then give it a few weeks, a few months, then you'll see the layoffs in the data. That leads to a negative feedback loop, which makes the stock market go down even more if it's not possible to get out of that negative feedback loop. So, what I think is happening, I think Trump is purposely doing this, right, to drop the markets, right, to make the markets go down. That allows the long end of the yield curve to go down, right? It allows the long end of the yield curve to go down. I think he wants the Fed to loosen up monetary policy, but he knows the only way to do it is for stocks to basically crash. And I feel like he's trying to speed run it, right? Rather than it be this narrative that plays out over years, it's almost like he just wants it to all play out now so that we get back to this other era of monetary policy, right? Where higher risk assets outperform lower risk assets. For the last 3.5 years, we've seen Bitcoin outperform most everything else in crypto. And again, I don't really think Trump cares about what's going on with altcoins, but what I'm saying is, in order to get into sort of that different monetary policy regime, you have to induce pain. And this is the pain. This is the pain. What's not clear is, will this pain lead to sort of a more prolonged recession, or will it just be kind of like a 1987 style drop, or a 2011 style drop where the market just simply recovers? And basically in 2011 the market had a pretty steep drop as well, right here, where it dropped about 20%, and then that was it, right? There was no recession. That was it. So that's what I'm saying. As the market is close to that 20% drop, I don't think you can just scoff at it and say that it's not a meaningful drop, because it is. If you look at the sort of the natural log of the price for the 20-week moving average for the stock market, and you look at how deep this is below the 20-week moving average, there's not that many times in history where it reaches this level, right? It's actually, what's really fascinating is that the stock market has dropped below the 20-week SMA more in 2025 than it did all of 2022, because the 2022 drop was more structural. It was like a structural drop. This has just been like a crash. Okay? Now, obviously, the pandemic crash was worse. The 2018 crash wasn't as bad as what we just got right now. Kind of similar to, again, 2011 brings up that 2011 drop. And then, of course, you had the financial crisis, and then you also have what happened during the dot-com crash. So, these drops, like when you see these drops, there will very likely be a massive, at the very least, counter trend rally whenever the rhetoric softens up and the data comes in, and maybe it's not so scary. Timing the exact bottom is a fool's errand. I don't think you should try to do it. I'm not trying to do it. It's really hard to do that kind of stuff. So you have to be careful. I mean, a lot of people, I was out of town, and I saw a lot of people calling the bottom on the stock market all week long, and then it just kept going lower. And it's hard. I mean, I even told people on ITC Premium last week before I went out of town, I'm like, guys, next week's probably going to suck because I'm going out of town. And it's sort of a joke because it seems like every time I go out of town, the market tends to dump like crazy, and the stock market dropped 9% last week, which is, pretty historic, right? It doesn't drop that much that frequently. And it also goes to show that, like, there's always a narrative for every outcome. Like, we had an inverted yield curve in 2019, and then we got this crash right here, right? And then we had an inverted yield curve in 2023 and 2024, and then now we're getting this crash. Like, there's always, and of course, people are going to blame it on tariffs. I'm not saying they shouldn't, but what I'm saying is there's always a reason that that sort of sets it off. We never know what it's going to be. But then there's this reason, and the sort of a famous quote I think I've said is like, bull markets. I'm gonna butcher the quote, but it's basically like bull markets don't just end on their own, right? They're murdered by something. And this time, obviously, you could say this one was murdered by tariffs, but it kind of sets into motion some of the things that we've talked about, right? Like the idea of ETH going home, the idea of what needs to happen for the Fed to go to looser monetary policy, and you're seeing that happen right now. Now, I don't know. Like, I haven't been following the Fed for the last week. I know. I'm sorry. I'll try to be better. I was just out of town doing other stuff. But I don't believe they've given really any clear indication that they're planning on pivoting just yet. If the stock market goes down, I mean, if it sweeps this low, I don't know. Like, it's almost a game of like chicken. Like, who's going to cave first, right? Like, will Trump relent some on tariffs to allow some resilience in the stock market, or will Powell relent on rates and come to sort of the rescue to try to help risk assets out? It's really a tough call, but I could probably show you many examples as to like why this is not just entirely related to tariffs. Although I do think that has a very strong contribution part. Like, I'm not saying there's no effect of tariffs, but I do think a lot of this was being set up previously. For instance, if you look at the overnight reverse repurchase agreement, right? If you look at the reverse repo, one of the things you'll notice is that you could think about it as like as this was dropping throughout 2023 and 2024, you can kind of think of that as putting liquidity back into the system. So you could almost argue that the markets continue to do well in 2023 and 2024 because of all this liquidity, right? $2 trillion that was pumped back into the markets. But now, if you look here, right? I mean, Trump took office here, right? So all of that liquidity that once existed, you're talking about 2.5 trillion January 2023. When Trump took office, this was at 120 billion. So you basically had like 2 trillion drained over those 2 years. So there's not as much to work with now. So again, it's one of those things where, like, had the tariff discussion occurred over here, the market maybe wouldn't have cared about it so much. But the market, arguably, is in a much more fragile state now, right? Like, if you look at the unemployment rate and you overlay it on this chart, like, the unemployment rate back over here in 2023 and 2024 didn't look nearly as bad, right? But now it's kind of up at its higher levels. It's starting to go up even higher. Look, liquidity is a lot lower. Bitcoin dominance is a lot higher. You have alt Bitcoin pairs which continue to go lower. Right? A lot of that liquidity has been slowly removed. And I think inflation is eating away at people's savings and whatnot. And so the market can then overreact to certain things that maybe wouldn't have been as bad had it happened during another phase of the cycle. But because it's happening when we've had higher for longer for 2 to 3 years, right? And we've seen the reverse repo get drained $2 trillion over the last couple of years. It kind of sets itself up for that perfect storm. And really, I mean, it goes back to what we talked about back in February, was to expect weakness between February OPEX and March OPEX that could then extend into mid-April, given the tariff and inflation uncertainty. And you might think, well, there's no way you could have thought it was going to drop 20%. But in reality, I mean, that's actually exactly what we talked about, because we talked about this exact move by the S&P divided by M2, because this ended up being about a 20% drop, which is exactly what we've, a little more than 20%. So it was even worse than what we've currently seen, right? It was about a 23 to 24% drop, and it happened over 2 months, right? This was, mid to late July to then like mid-October. So it's about a 2 month, I guess a 3 month drop. Let me get it exactly. I think it was like 11 weeks, I think. It was about 11 weeks. But the bulk of the drop occurred in about a month and a half, right? The bulk of the drop occurred in a month and a half, but technically it didn't really bottom until 11 weeks later. Now, if we look at it over here, right, in sort of this business cycle and see how long this drop has occurred, if we get this exactly, right, so if we take it from the high here, it's been about 6 weeks. 11 weeks would actually put you out in early May, which is kind of longer than I'm sort of thinking, unless it's a wick, right? And oftentimes what we've said before is, and I could easily see this happening this year, because a lot of times people say, well, sell in May and go away, but a lot of times when you sell off before May, you then can get a rally sort of going into the summer months. Actually, same thing happened to the dot-com crash, right? We saw a rally, counter-trend rally, in sort of like the May to August timeframe. Crash in like March and April, and then a counter-trend rally in sort of like mid-April to August, and then the recession was obvious, right? And that was basically it for the cycle. So with Bitcoin, I mean, the way I see it right now is that if it can get a weekly close above the bull market support band, that would, I mean, that would be something, right? Like that would be a step in the right direction. But even then, you still need multiple weekly closes up there for it to really regain that structural support. Even in July 2024, right, when it had this drop, it did rally back above it, and then it just lost it and then put in a lower low. So I guess it's the sort of the cynical side of me showing again. But I don't know. When I've sort of seen these discussions with the stock market and with Bitcoin, and when people say, well, like Bitcoin's holding up way better than the stock market, usually that precedes Bitcoin then following the stock market. It could play out where like the stock market bounces, Bitcoin bounces, and the stock market then sells off again, and then Bitcoin sort of is unable to hold on sort of another drop by the S&P. But for now, it's getting rejected by the 21-week EMA. Yes, there's a death cross coming up. Normally, there's some type of counter-trend rally at the very least on the other side of the death cross. It does not have to be immediate, but usually on the other side of it, could be a week later, could be 2 weeks later. If it's like 2021, it could be a month or two later. If you go back and we sort of remind ourselves what happened in 2021, right? You had a death cross in June, and then you didn't really get a big counter-trend rally until a month later, right? It was exactly 1 month later. So that would correspond to potentially early May, right? And that would actually line up with the S&P divided by M2, 11-week drop. That would also line up with early May. So that continues to stick in my head. I would honestly be very surprised if Bitcoin got out of this with at least retesting the 2024 high. It seems like a likely outcome at the very least. So I'm still leaning in that direction for now. And also, of course, I mean, I do think that, a lot of this helps with Ethereum, sort of the view with Ethereum, and that is Ethereum going deeper into the logarithmic regression trend line, which is what we've talked about when you think about, when you look at interest rates minus the 2-year yield. We talked a lot about this idea that, this move that we've had I mean, it obviously lines up with the financial crisis, but it also lines up with 1989 to 1990, where you had this recession right here, where the stock market only dropped about 20%. But the reason why I bring that up is because if you go look at the stock market in 1989 to 1990, it had sort of that triple top, right? It had that triple top, and and then it had a lower low, and that lower low was the recession, right? So like, there's a chance that you get a recession, but by the time it's declared, the low is already in, and would have been in for quite some time in that scenario. But if you look at this chart, right, we've talked about this a lot. You have a high, and then you sort of have a, you sweep those highs. You have a low, a lower low, and then that final lower low was the recession low. And so when I look at Ethereum, I just wonder, like, is it going to play out the same way, where you have, and some people say I should use a different exchange that is, doesn't have those wicks to the same extreme, but, does it play out the same way, where you have sort of these lows, you have a low, a lower low, and that final lower low is the recession low, where it then goes deeper into the logarithmic regression trend line for Ethereum, right? And I just go back to that idea. And I know a lot of people say, well, I shouldn't be comparing it to 1989, 1990, but it still seems like, it still seems somewhat relevant. And Ethereum is only a couple $100 away from sort of being quote unquote home, right? It's around that $1,500 to $1,600 milestone for Ethereum to be home. And this is exactly what's happened every cycle, is that it goes home. I think the biggest lesson for everyone is that this is one of those things where, like, it doesn't always happen when you think, but it's something that does tend to happen, right? Like, it doesn't always have to be like the pre-halving year or the halving year, or or the post-halving year, but it does tend to happen, right? And this is the first time where we've seen it happen in the post-halving year. So, but the process is still playing out, and this is the same process we saw over here in 2019, right? You break down, you go lower, you get some type of change in monetary policy, and then ETH Bitcoin starts to do well. But you could argue that ETH USD is just sort of doing what it did back over here, where it goes into the regression band, and then it just kind of slowly bleeds down. And even for a while, there was some strength there, but eventually it did give way and go further into the regression band. So I continue to think that, these are relevant comparisons, even though they seem somewhat abstract. Like, why look at what happened in 1989 to 1990? I look at it because it's the optimistic view, because the other view, through the lens of the interest rates minus 2-year yield, the other lens is the financial crisis, and I'm not rooting for that, right? I think that would be very bad, not only for crypto, but just for the entire U.S. economy, and I don't want to see that happen. I would prefer for the sell-off to just be 20 to 30%, but I also, I know that, like, there's always a chance with the stock market that you do sometimes get these, like, left translated cycles where the peak occurs when you have a new administration take over, right? I mean, this is what happened in sort of 1969. This is what happened in 1973, is that you had these drops just as a new administration took over. But I think the biggest difference between those drops and this one, at least so far, is this drop appears more like a crash, and kind of like an engineered crash. These drops were a lot more sort of structural, right? They just sort of slowly went down. In fact, let's see how long it took for the S&P to even drop. What is it, like 17, 18? I think the stock market's down 18%. Like, how long did it even take the stock market to drop that far? I mean, maybe I'm wrong. Maybe it happened sooner than I'm thinking. No, I mean, that was like an 11% drop. In fact, from when it topped out here in December of 68, for the market to drop, I guess I need to go to price and date range here. So for the market to drop 20%, it took about 30, well, I guess right here, right? I mean, it took about 36 weeks, 35 weeks. This drop has occurred in like 6 weeks. And then if you look at the next cycle, the amount of time it took to get a 20, well, I guess it was what, an 18% drop. It took about 33 weeks again. So you're talking about over half a year for it to get a similar drop. So, like, I'm not even entirely sold on this comparison just yet because it seems a lot different in terms of like the way it's dropping. It's not. It doesn't look like a like what you saw back then exactly. It just looks like an engineered crash, right? I mean, just that's what it looks like. Um, and the biggest question is whenever the counter trend rally occurs, right? Whenever it occurs, does this do too much damage where it then induces a recession? And that's why I hope that we don't, that the market doesn't really get more than it bargained for. I think there's this idea that like, oh, monetary policy can come to the rescue and that all will be fine, but again, it's lower stock prices that lead to layoffs. So what's happening right now in the market is very likely going to lead to layoffs. And those layoffs might not become obvious until later this year. There's still a few levers the Fed can pull. They can always lower rates, and they can end quantitative tightening. They're probably not going to start QE just yet. Powell said they're not going to start it until interest rates are back at zero. They're obviously a long way off from that. So we'll see what happens there. But those are just my thoughts on the market. And honestly, like over the next few days, I'll probably present other ideas as well. I've been out of the loop for the last week. I've loosely followed the markets. There's some things I haven't even fully followed that closely, so I'm just kind of like looking at the charts, trying to figure out what's actually going on. But the stock market's down a lot right now. There's only been a few times in history where it's dropped this far below the 20-week moving average, so you at least have to pay attention to that. There will likely be, at the very least, a counter trend rally sometime later this spring. Whether it resolves to a lower high or a higher high will ultimately depend on, if this crash leads to sort of a negative feedback loop with layoffs that then lead to lower stock prices or not. Hopefully, things remain more optimistic, right? Hopefully, things remain more optimistic. But I just with Bitcoin, I can't help but wonder, is this just kind of like a lot of the other times where people are like, oh, Bitcoin's holding up better, and then like a week or two later, it then just does the same thing, and everyone's like, oh, it's not actually, it was just delayed. To me, that's what's going on. But anyways, guys, we'll wrap it up there. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.